We all know, every trader knows, that losses can be bad for loads of different reasons, but profits can be bad too, sometimes? How does that work?
Yeah, they might anchor the bad habits or destructive habits in some cases. So you got to be careful about that. Earning quick and earning a lot of money, so might be emotionally stressful, as well as getting losses in a quick period of time. So they might wipe you out of the balanced emotional state.
Hello traders, and welcome back to Trading Talks from Exness. Last week in the episode we talked about patterns versus indicators, contrasting them and how they work, advantages, disadvantages of each. So if you missed that episode, I'd encourage you to go back, take a look at it at your convenience. This week we're going to be talking about the biggest lesson from Forex didn't come from a loss, it came from a win, and specifically psychological aspects of success and failure in trading. If you have not already done so, I would encourage you to subscribe to Exness's channel, turn on notifications, so you always be aware immediately when the next episode is coming out. I'm Michael Stark, Financial Content Leader, and here with me today is Stanislav Bernukhov, Senior Trading Content Specialist.
Hello, Michael. Thank you for having me today.
So we know that when we lose in trading, it can often be bad for lots of different reasons, primarily financially. But trading, when we make a profit in trading, that can be negative psychologically. Can we expand on that a bit?
There are two ways, basically, how winning trades can negatively affect trading performance. The first one, it roots the destructive habit, let's say. For example, if you sit on a loss and then you say, all right, I will sit for a little bit more, maybe it will come back, return, and then, for example, it actually comes back and turns into a profit. You see, I'll do that again and again and again. Finally, that ends up poorly because finally you will go against the strong trend. So you, especially if you make money, you raise your capital and you actually accumulate your account. So finally, this type of behavior will destroy the account over the time. And another one is when you get the winning trade quickly. So it might be a symmetrical trading opportunity like trend following trade or momentum trade. But then you might get the false feeling that you are a god of trading right now because you make so much money in a so short period of time. So these are basically two main challenges, I think. So for example, in my early days, I quickly discovered that I don't want to sit on the losses. So placing stop losses after losing, I think, two first accounts, I figured out that I will never not place a stop loss. So that habit was eliminated pretty quickly. As for the second one, let's say when you have a winning trade, a quick winning trade, that was another story. And that was back in 2008 during the world financial crisis. If you remember that, the markets were falling. And I used to make a lot of money basically on a single trade, adding to this trade when the market used to retrace, moving down again, retrace, moving down again. So I made like very, very decent amount of money in a short time period. And I felt it was not pure luck because it was some analysis behind that. And I felt like, all right, so now I figured out the game. And that was the moment. So I earned this money. I went to France on the New Year Eve. When I got back, so what do you think I started doing back again? I started to do the same thing. Short in S&P 500 index, which was falling, which made money for me in the previous quarter. So all of a sudden, it started to rebound. And I started to short it again and again and again. And all of a sudden, I've lost maybe half of my account back then during the first quarter of 2009. So that was, I think, the most painful mistake, and it came basically from a big win. So yeah, that's a real story.
And the mistakes that we make, I think, are only really truly mistakes or failures if we don't learn something from them. Because you narrate this story about S&P 500 2008, 2009, it's obvious that you have learned something from the mistake. So that in that regard, it's not necessarily a mistake. It's better to make it at this stage, like early in the trading journey, so to speak, than it is to be trading possibly for a number of years. And then, you start making these mistakes and you kind of feel like it's a shock to your confidence.
Yeah, so of course you learn a lot from the pain in trading. So unfortunately, I think there is no other way to learn things in trading other than from pain. So of course we might dig into the data, make historical research, but we kind of learn from pain. So from that trade, I learned that market conditions may change substantially. They may flip kind of, over the week. And you need to actually keep an eye on that. You need to keep an eye on narratives. And it's pretty long story to get out of a drawdown. So that might be, that's a period when you might not earn money for the long time, recovering from a drawdown. So that's also pretty painful. So you want to avoid that next time. So it's much easier to not get into the drawdown than to recover from a drawdown. So that's the second lesson. So it gave a lot of insights, basically. So maybe it shaped the way I trade now. So I don't pursue really, killer trades. So instead, I want to, divide one big trade into several smaller pieces and to get the maximum probability of the trade rather than the maximum profit out of this trade.
Yeah, that's, I think, is definitely a good approach. Law of averages and law of large numbers. Depends on the person, of course, which one. But I think one of the key things here is when we have these negative psychological effects after a win, these happen, I think, in many cases because we just don't really have control of our emotional reaction to getting a win. Because the stereotype of traders, of course, sometimes is true, but the stereotype is that when you make $10, you're like, okay, whatever, this is fine. Whereas if you lose $10, you're like falling apart emotionally and it's like nightmare. Sometimes that's true, but I find actually it's really common, especially when I was a newer trader, it was really common for me to be like absolutely euphoric at making profits. And of course, that's great in the short term, but in the longer term, if you have this like strong emotional like dopamine rush, so to speak, when you make a profit, that is a strong negative reinforcement,
Exactly. But if the profit is really big and fast, so it can kick you out of the mental, balance the mental state and emotional state, because you just not got used to that in the normal life, in the real life, especially newer traders. When they see numbers, growing rapidly on the account, that's the really euphoric state of mind. They say, oh my gosh, so I haven't seen anything like that. I need to go to this boring job. Why do I need this? Because I can make money like that, like that.
Yeah.
So that is very difficult to keep inside of the balanced state of mind, because you start overestimating your abilities, underestimating risk in your next trade. So, and too many times after such huge peak on the equity, like a hockey stick. So traders used to go down and down and down and down, and to give big portion of that back. So that's the common pattern, unless you know what you're doing. So unless you have the experience. So that is actually a challenge to keep, because it's not that difficult to make a profit when the market allows you, actually. So it's much more difficult to keep the profit.
Yeah.
And the professional traders know that keeping the profits in a whipsaw type of markets and choppy markets is much more challenging.
Yep. And I think one of the ways, there's a few ways, of course, that we can try to get a handle on this, but one of the ways that worked for me, certainly, was to start small and kind of gradually work up. And obviously, it's common sense to start small with pretty much anything, including trading. But one of the reasons I think it's particularly important for psychological effects of profits, is that when you start small and you're making small profits, it doesn't have that much of an emotional impact on you necessarily. And gradually, you work your way up and you kind of get more familiar with your psychology around profits and losses as you move up gradually. What else would you suggest, San, to try to control this?
It's easier to get used to profits when you kind of expand your ability to have the gut to actually process these profits. And so moving in a constant but maybe not so fast flow is psychologically much more comfortable and much more convenient, because you kind of accumulate it over time, getting from one target to another, to another, to another. So that's why it would be much more difficult to wipe you out of the process from the flow. Well, of course, we also know that a good trader should expand the profitability. If you see the volatility coming, for example, if you see the breakout coming, it will be not reasonable to leave it on the table, right? But you need to be prepared for that, and your basic flow, your major flow, should be probably more consistent, more, moving in a constant tempo rather than in a big shortcuts. So yeah, you're right with that. So it's like, training a muscle, in the gym. So you don't take the big weight immediately. So instead you train your muscles, take a bigger weight, then bigger weight, the bigger weight. So that's how you train yourself, train your body, and the same is with mentality, with your emotional state.
Yeah, exactly right. I was going to use a different analogy probably of cooking or driving, but the gym is also a very good analogy. We start small and start gradually and we work our way up step by step. But I think also one possible, I would like to pick your brain specifically about this. One possible way that we can remove to some extent the euphoria is by changing instrument. Because if we consider the cultural is the wrong word, the social, if you will, context of things like crypto, making a big profit on crypto is likely to have a different psychological effect on us compared to if we make a relatively big profit on, for example, eurodollar, because eurodollar by comparison is boring, inverted commas. So that I think maybe is something, it has helped me in the past, certainly.
Crypto is no longer the favorable instrument, I think, as for January 2026, so it's no longer in trend, but we might mention gold or silver, whatever. Yeah. But yeah, you're right. So there are fast instruments, there are slow tempo instruments. Fast instruments, they attract a lot of traders. They traditionally focus on gold, on NASDAQ, on whatever moves in the fastest pace. Yeah, sometimes it makes sense to switch to something slower to maintain this tempo. But actually that depends on whether the money is going. So for example, for me as a trader, I don't distinguish instruments by tempo. I see where the flow is actually going. For example, I don't know, yesterday, day before yesterday, commodity currencies were moving, like Australian dollar, or even other exotic currencies were moving. So why not trade them? So if you see the flow, traders still, they stick to gold. They don't step outside of this bubble. And yeah. So I think that you might gain some experience in trading different instruments to find the perfect combination of discomfort and gratification. Is finally, you need to find a sweet spot. There are no right or wrong instruments, so you need to find the one that suits you. So I think that's very important.
And as to turn back to your previous analogy, if it doesn't working for you to lift weights, then you can move to legs for a period. Same idea with changing instruments. Yeah, and same idea with changing national cuisines if you find your cooking isn't successful. So thanks very much, Stan, for being here. Always really good, I think, to have a discussion with you, particularly about trading psychology.
Yeah, thank you, Michael.
And thanks very much to our viewers. And we hope that you'll join us again next week for the upcoming episode of Trading Talks from Exness, at which we'll be talking about exotic currencies versus majors.